Residential. Thank you so much for watching our podcast, Real Estate Insider, where America goes for funding. Your direct nationwide lender for over 20 years, helping Americans get their funding on real estate, commercial, residential, private lending. Today, the special that we're talking about is mortgage loans for the self-employed. It's a completely different world how it works, and today we're going to break it down, explaining how self-employed. There's over 19 million self-employed small business owners in America, and over 60% of them can't get a mortgage through their own bank to be able to qualify for a home loan. So why am I bringing this up? Because this is self-employed is the hallmark of America, and even if you're self-employed, you still deserve to own real estate, buy your home, and get a mortgage. And there's been hundreds of billions of dollars that's been created to help the self-employed with private lending, private mortgage like us. We're a private lender to be able to help the self-employed people out there to be able to get funding, to be able to purchase their home with conventional low mortgage rates, without tax returns, without W-2s, without pay stubs. So that's the power of the self-employed mortgage loan. But a lot of people that are self-employed, and it doesn't matter what type of self-employed line of work that you're in, they're not aware of the loan products that are actually available for them. They think just because they go walk into their bank and they apply for a home loan, that if they can't get approved, then they have to rent. They can't get a loan, or so that's the stigma that millions of self-employed people have. And that's why we push so hard on broadcasting, and getting the message out there through all mechanisms to educate people, empower them, that there are products out there to help people that are self-employed. We've helped thousands of self-employed people all over the country get their loan, whether it's a primary residence, secondary home, investment property, construction loans, commercial loans. And you do it with great loan terms. These are not hard money loans. These are not bridge loans. These are great 30-year fixed mortgage rates, and without any tax returns, without any W-2, without any pay stubs. So we're going to talk about this today to explain what self-employed loans are and how you can utilize those to your benefit if you are self-employed. And you may be a builder, you may be a broker, you may be a realtor, and someone that's in a situation where they're trying to get a home loan, get a mortgage, and they're having a really hard time because after all their deductions, or their taxes, or the way that they file their 1099, they're unable to get approved for the loan. It doesn't mean they don't deserve. Number one, it doesn't mean you don't deserve to own a home. But they give up and they keep renting, and they lose that dream of home ownership or real estate acquisition. So we're here as a direct lender, specializing, embracing the self-employed to be able to help you guys out there. So anyway, enough said about that. So basically, the way it works with self-employed loans, there's a lot of different options. Let's talk about first just your primary residence. If you're trying to buy your primary residence, the type of loans that you can get. So you can either buy a home, and you can do this up to a $30 million home for your primary residence, a single family home in the United States, with the exception of New York. And the way it works is you can either use your bank statement, okay? Your bank statement to qualify. And it can be personal and business bank statements, or you can use your profit and loss statement, your P&L, for your business. You can use your 1099. If you get 1099 from another company, you can even do something called no documentation, where you might be just living off of assets. You might be retired and might be built up a nest egg or whatever. You might not have any type of income right now. So you can do something called no documentation, and where you just have to disclose the money for the down payment. So those are the 4 different options that you can do if you're self-employed or retired. Okay. The first one with the bank statements, and it can be multiple bank accounts, but they want 12 months of bank statements. And they take the 12 months deposits and they average those out. And that's what they give you for your income. Now, they're not going to give you 100% for those deposits. Depending on the size of your business, they're going to give you a percentage up to 90% of the deposit. So if you're depositing $10,000 per month, they will give you credit for, depending on the size of your business, for anywhere from 50 to 90% of those deposits. And that's the basis to qualify you for the loan. Now, if it's a purchase loan, You can buy your home with the self-employed loan with as little as 10% down. That means that the bank is going to give 90% and you have to put 10%. Those interest rates on those mortgages today. Hey, Michael, what's up, man? Those interest rates on those mortgages today start at 6.9% for a 30-year fix with no mortgage insurance, and they go up from there based on your credit. Um, these programs we go down to a 600 credit score. So you have to have a 600 or higher credit score, no bankruptcy or foreclosure in the last 3 years, and you have to be self-employed for at least 2 years. Okay. So that's for the bank statement. If you had three sets of bank statements, you can use all three. You can use personal and business, any combination of those. Now, going over to the profit and loss loan program, that's where every business owner runs something called a P&L. It's your income over your expenses, shows what your net income is. So basically, the top line is your revenue. You did $1 million a year in sales. You had all your deductions, and then your net income is 400,000 or whatever that income is. That's your profit and loss statement. If you don't have bank statements, or you have a lot of overdrafts or NSFs in your bank account, you can use a profit and loss statement. And so they're going to use the net income on the profit and loss statement to qualify you for the loan. So if you made $400,000 in that year, that's what you're going to be using to qualify for the loan, not your tax return, not your W-2, just your profit and loss statement. So that's the other thing that you can do. Now, you do not need an expense ratio letter for this because we already see the expenses on the P&L. So that's another option. Those are good for business owners. I like that. It's one of my favorite programs. Now, thirdly, the other option that you can do is 1099. Some people that are self-employed or 1099, like a truck driver. If you work for a bigger company and you're a truck driver, they give you a 1099 at the end of the year. So you can buy the house just with that 1099. So let's say the 1099 they gave you was 200,000. You can get up to 90% credit for that 1099. All right. So you don't need any P&L. You don't need 12 months of bank statements. You just need 2 months of bank statements to show that your money is coming in the account. But the 1099 is what's used to qualify you up to 90% of the gross income on the previous year's 1099. So today is 2025. You would give us your 2024 1099. And all of these programs, you can go up to a 50% debt to income ratio. They all start with the 10% down, all go down to a 600 credit score. And we mentioned where the interest rates are starting. Now, your specific terms are going to be based on your specific situation. Not everyone's getting 10% down. Not everyone's getting a 6.9% rate. I'm just telling you where things are starting so you can get an idea. They're all 30-year fixed loans. They have no prepayment penalty, no balloon, no adjustable rate. So, and then lastly is the no documentation. Let's say that you don't work, you just have a bunch of liquidity, a bunch of assets. If you don't have an income, well, then you can do an asset-based loan where you just have, you show your bank statement and the money's in the account. So now this loan, depending on the situation, the purchase price, your credit score, they want to see that you ideally have 36 months reserves in the bank account. So if you're buying $1 million house and the payment is $5,000 a month, then you have to have 5 times 36 in the account. So, or 180,000 of reserves, because you're not showing us any type of income or employment. You're living off your reserves. So they want to see you have 3 years of reserves in the account. So these are the different self-employed home loans that are available in the market. And like I said, they're available nationwide. The minimum loan amount is 100,000. The maximum is 30 million. We talked about the requirements. We are the direct lender, the funder, the underwriter, the processor, the closer for this loan program. The only state for primary residence where it's not available right now is New York. Now, New York might be available in 2026. but as of this video shooting, it is not available in New York. So if we can help you with any self-employed mortgage loan programs, please reach out to us. We're here to help. Call or text my office, Angelo Christian, 832-431-6331. It's where America goes for funding, guys. Thank you guys so much for watching Angelo Christian Live. We appreciate everything. Take care. Peace out. Have a great weekend. Bye.